Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 137, recorded here on October 13th, 2024. This podcast is for entertainment only and is not investing advice. So, as always, please do your own homework. All right, we'll start with the market update outlook, get into the weekly top Bitcoin news, and then wrap up with this week's featured post on Bitcoin Fortress Substack. And so with that, we'll get started. Wall Street on Friday posted a 5-week win streak for the first time since May. The benchmark S&P 500 crossed and ended above the 5,800 points level in a historic first, while the blue chip Dow is fast approaching the 43,000 point milestone. Despite Middle East escalation concerns, a hotter than anticipated consumer inflation report, and a recalibration of Federal Reserve interest rate cut expectations, markets have continued to march higher. Some of it can be chalked up to favorable reactions to quarterly results from big banks. But the story this week has largely been traders' resilience to negative developments. The Fed published the minutes of its September Monetary Policy Committee meeting on Wednesday, a meeting where the central bank delivered a half-point interest rate cut to kick off an easing cycle for the first time since the COVID-19 pandemic. The minutes showed that a substantial majority of policymakers backed the big 50 basis point cut. Inflation grabbed all the attention on Thursday and Friday. On the former day, the Consumer Price Index for September came in hotter than anticipated on a month-over-month basis for both the headline and core figures. On the latter, Producer Price Index figures came in cooler than expected. The earnings season also kicked off with major banks and will pick up a notch next week with several high-profile names scheduled to report their results. For the week, the S&P 500 added 1.1%, while the Nasdaq Composite also gained 1.1%. The blue chip Dow rose 1.2%. And let's take a look at the week ahead. Next week, investors will be focusing on the retail sales print and industrial production report to gauge the economy ahead of the Federal Reserve's next policy meeting on November 7th. Options trading on the federal funds contract implies a 90% probability of a 25 point rate cut, despite some recent conflicting economic data. Earnings will continue to be in full swing, with Netflix, Procter & Gamble, Taiwan Semiconductor being some of the notable companies due to report. Healthcare sector will also be in focus, with United Health, Johnson & Johnson, and Abbott Laboratories all lined up to report. All right, jumping into the Bitcoin news, we'll start with Block 865474, important news of the week from No BS Bitcoin. New security advisories affecting Bitcoin Core versions before version 25. Bitcoin Core developer Nicholas Gage posted to the Bitcoin Dev mailing list to announce public disclosure of 3 vulnerabilities affecting Bitcoin Core clients prior to version 25. Disclosed vulnerabilities include a block TXN remote node crash, an issue with mutated blocks hindering block propagation, and a node communication issue due to env to send sets growing too large. You could read more about them, and they have a link, and I'll include links to all of this in the show notes so you can read it for yourself if you want. Public disclosure of BTCD find and delete bug. Antoine Poinsot posted to Delving Bitcoin to disclose a critical vulnerability affecting BTCD Bitcoin full node implementation clients prior to version 0.24.2. It allows virtually anyone to fork off vulnerable BTCD nodes at virtually no cost with a standard transaction due to incorrectly implemented consensus rules for legacy signature verification. The issue was patched in BTCD v 0.24.2, released in June earlier this year. BTCD node runners should update to this version ASAP. 2140 Foundation launched to support open source Bitcoin development. Co-founded by Bitcoin developers Josie Baker and Ruben Thompson, 2140 is on a mission to onboard aspiring protocol contributors and provide protocol veterans with long-term stability. Cryptocurrency exchange OKX has provided an initial multi-year grant to bootstrap the nonprofit's efforts. Senator Lee introducing the Saving Privacy Act. Utah Senator Mike Lee has introduced the Saving Privacy Act, officially titled A Bill to Amend the Right to Financial Privacy Act of 1978 to preserve the confidentiality of certain records and for other purposes. The bill aims to reduce financial surveillance within the U.S. banking system, reports The Rage. And you love to see that. Probably won't go anywhere, but still. It's nice to see. IRS sued for taxing block rewards again. Tezos stasher Josh Jarrett has initiated a new lawsuit against the Internal Revenue Service, aiming to challenge the rule that token rewards are to be treated as income when earned. He is being assisted by Coin Center. Mining gold isn't a taxable event, and mining a Bitcoin is no different, argues the Washington, D.C.-based think tank. Couldn't agree more. UAE exempted Bitcoin transactions from VAT. The United Arab Emirates has exempted Bitcoin and altcoin transactions from value-added tax effective November 15th. This change is retroactive to January 1st, 2018, removing the previous 5% fee on transfers and conversions. IMF continues to pressure El Salvador over Bitcoin adoption. I think we covered this last week. The International Monetary Fund has again urged El Salvador to reduce its reliance on Bitcoin. What we have recommended is a narrowing of the scope of the Bitcoin law, strengthening the regulatory framework and oversight of the Bitcoin ecosystem, and limiting public sector exposure to Bitcoin, said the IMF spokesperson Julie Kozak. And President Bukele's response to that is nothing. He's going to keep going, which you like to see. WEF, tough U.S. regulation is positive for the industry. The latest World Economic Forum report reviews digital asset regulation in 9 regions, noting varied perceptions of the U.S.'s strict anti-illicit finance measures, reports The Rage. U.S. judge approved alternative victim notification for Bitfinex hack. A recent government filing indicates that Bitfinex might be the only entity entitled to restitution for the 2016 hack that led to the theft of around 120,000 Bitcoin. U.S. authorities managed to retrieve 94,643 Bitcoin linked to the hack in February 2022. In related news, federal prosecutors want Heather Razzle-Khan Morgan to spend 18 months in prison for her role in the hack. 0.34% of cryptocurrency transactions potentially linked to crime. Crypto Information Sharing and Analysis Center reports that cash continues to be the dominant means in criminal activities globally. Wow, would you look at that? Irish police is holding on to 5,500 Bitcoin it can't access. Ireland's Criminal Assets Bureau has been unable to access the coins seized from a drug dealer back in 2020. A 53-year-old who set up the wallets claims that a case containing seed phrases was lost following a break-in at his home, as well as a clear out of the property following his arrest. He's either lying or he has really bad OPSEC. Bitmain launched the Antminer S21 Plus series. The Antminer S21 Plus HIDE is said to deliver a hash rate of 319 terahash per second and an efficiency of 15 joules per terahash. The S21 Plus model promises 216 terahash per second with a power efficiency of 16.5 joules per terahash. Shipping is expected to begin Q1, Q2 of 2025. Ethiopian hash rate goes burr. Ethiopian Electric Power has confirmed their support for the industry and noted that there are currently 600 megawatts of operational miners with Several hundred more megawatts expected to be energized this year, wrote Ethan Vera of Luxor Technology. The first non-custodial Bitcoin off-ramp platform in Mexico, Swapido, partnered with the Bitcoin company to launch a solution that lets users sell their Bitcoin over the Lightning Network and receive pesos directly in Mexican bank accounts. The service is available worldwide, with the exception of the US and sanctioned countries. BitKey partnered with Robinhood. BitKey users in the US can now leverage their Robinhood accounts to directly purchase and transfer cryptocurrencies to cold storage without leaving the BitKey interface. Other supported exchanges include Cash App, Coinbase, and MoonPay. Jolt's partnered with Blockstream. You can now earn Bitcoin back on all successful referrals when you join the Blockstream affiliate program. Payouts are distributed seamlessly over the Lightning Network, announced the company. You can become a Blockstream affiliate here, and there's a link in the article. Coinbase enabled sending to Taproot addresses. The platform's users can now make Bitcoin payments to Taproot addresses. The update addresses a long-standing gap since Taproot's activation in November 2021. Telegram Wallet app now supports evidence collection. Wallet will carefully review each law enforcement request and cooperate on a case-by-case basis to disclose information in accordance with its internal policies and applicable laws. All communications and requests must be fully verified, states the project's updated FAQ page. Google Play Store to distribute third-party app stores. A federal judge has ordered Google to allow third-party app stores onto the Google Play Store as part of a nationwide injunction stemming from Epic Games' antitrust victory. The injunction takes effect November 1st, with Google granted up to 8 months to comply fully. X resumes services in Brazil after complying with court orders. Brazil's Supreme Court allowed X to operate again in the country after the social media platform started adhering to court decisions, a stark reversal from the stance its owner Elon Musk had initially promised to defy. Money talks, bullshit walks, as they say. Archive.org hack leaked data on roughly 31 million users. Have I Been Pawned reports that Archive.org was hacked last month, exposing 31 million records, including email addresses, screen names, and bcrypt hashed passwords. Personal information of over 77,000 Fidelity investment customers exposed. The breach reportedly occurred between August 17th and August 19th. The company has yet to clarify what personal information was stolen, besides names and other personal identifiers. However, it added that this incident did not involve any access to your Fidelity accounts. Russia banned Discord. The country's internet watchdog, Roskomnadzor, announced that access to Discord was restricted to prevent the use of the messenger for terrorist and extremist purposes, recruitment of citizens to commit them, sale of drugs, and in connection with the posting of illegal information. Bitcoin Amsterdam 2024 took place this week. We have links to day 1 and day 2 recordings and an agenda if you're interested. Bitcoin eCash edition took place in Berlin. You can find all the talks and workshops here, and there's a link for that. Moving on, Hodler's Digest, October 6th through 12th from Cointelegraph. Let's see what they have to say and try to skip over the shitcoinery. Defunct crypto exchange Mt. Gox has postponed the deadline to repay its creditors by a year, pushing the due date to return funds to October 31st, 2025. According to an official announcement, many rehabilitation creditors still have not received their repayments after not completing the required procedures. The platform was one of the earliest crypto exchanges in the world and at one point handled about 70% of all global Bitcoin transactions. It faced a series of security breaches and unnoticed hacks that led to a halt in withdrawals and its eventual collapse in 2014, locking the funds of about 127,000 users. A Nigerian court has rejected a bail application by Binance executive Tigran Gambaryan, which cited health concerns. The court instructed the prison to refer him to a hospital for treatment. Judge Emeka Nwite of Nigeria's Federal High Court in Abuja denied Gambaryan's bail application on October 11th, according to a report by Bloomberg. Nwite reportedly ruled that the Binance executive should remain in prison despite his worsening health, as such a condition does not entitle them, prisoners, to leave custody. The judge reportedly said that Gambaryan would be allowed to leave only if the continuous stay of the detainee possesses a harm to others and quarantine isn't available. Guess you don't want to get thrown in jail in Nigeria, do you? After several legal attempts to delay reporting to prison for 7.5-year sentence, former FTX Digital Markets co-CEO Ryan Salam will likely be behind bars by the end of the day on October 11th. On an October 10th filing in the United States District Court for the Southern District of New York, Judge Lewis Kaplan denied Salam's request to begin serving his sentence on December 7th rather than in October. The former FTX executive claimed there were medical reasons for him to remain a free man for 2 additional months, but Judge Kaplan cited previous attempts at delays and Salam's recent behavior. U.S. attorneys argued that the former FTX executive appeared physically recovered during a September 12th hearing and took the time to appear on the online talk show The Tucker Carlson Show for an interview. Economists Tyler Cowen and Alex Tabarrok, creators of the blog Marginal Revolution, recently made their picks for who might win the upcoming 2024 Nobel Prize for Economics. The discussion came during an October 8th episode of the duo's Marginal Revolution podcast. In what he referred to as an unusual pick, Cowen said, given the opportunity, he'd pick Ethereum co-founder and computer scientist Vitalik Buterin. What? While he and a co-host, Tabarrok, discussed their views on the merits of theoretical economics, the duo agreed that Buterin deserved the award because he actually did something in monetary economics. Per Cowen, Vitalik built a platform, created a currency, you could say refuted Mises' regression theorem in the process, obviously following in the footsteps of Satoshi, but my goodness, what does someone have to do to get a Nobel Prize? I don't know, build a centralized shitcoin? Yeah, sure, why not? I mean, if Ben Bernanke can get a Nobel Prize, then why not? HBO's documentary, which we'll get into, or I think we talked about it last week, but I think we will maybe dive into this a little bit deeper. HBO's documentary aimed at outing Bitcoin's pseudonymous creator Satoshi Nakamoto identified Canadian Bitcoin core developer Peter Todd as the cryptocurrency's investor. Cullen Hoback, producer of HBO's Money Electric: The Bitcoin Mystery documentary, confronted Todd and Blockstream CEO Adam Back with the evidence he had stitched together to conclude that Todd was Nakamoto. The documentary's finale ends with Todd saying, "Well, yeah, I'm Satoshi Nakamoto," in response to a confrontational question from Hoback. Still, this admission doesn't necessarily prove that Todd is Bitcoin's inventor. He is well known for invoking the phrase, "I am Satoshi," to support the real creator's right to privacy. Todd publicly denied being Bitcoin's creator ahead of the documentary's debut and questioned Hoback's conclusion after clips from the documentary leaked online ahead of its debut. Let's see. FUD of the week. An 86-year-old former California attorney was sentenced to 5 years probation and ordered to pay almost $14 million after admitting to carrying out a multi-million-dollar crypto Ponzi scheme. In an October 8th judgment filed by Las Vegas federal court judge Gloria Navarro, David Cagle was sentenced on one count of conspiracy to commit commodity fraud after pleading guilty in May. Cagle is currently in hospice care at a seniors facility in Las Vegas due to ailing health. He will serve out his probation there unless he is able to leave, in which case he will be required to wear a monitoring device. Government prosecutors who charged Cagle last year said that from December 2017 to around June 2022, Cagle and two accomplices lured victims into investing in a fraudulent crypto bot trading scheme, promising high returns and no risk. Wow, this goes to prove that you're never too old to shitcoin and be a fraudster. The United States Federal Bureau of Investigation has been criticized for allegedly violating the terms of the MIT license in its smart contracts. On October 10th, ex-user 0xCygar, a purported abstract chain contributor, publicly accused the agency of using Open Zeppelin's libraries, an open source code resource, without properly including the required license attribution. If confirmed, the submission could constitute a breach of copyright law, as the MIT license explicitly mandates that any substantial use or modification of its code include the original license. The ex-user claimed that they had alerted the FBI to take the necessary steps against the FBI. The allegation centers on the FBI's alleged failure to include the MIT license notice when utilizing Open Zeppelin libraries, which are widely used to create secure smart contracts. The MIT license governs its use of blockchain technology, particularly within the Ethereum ecosystem. It allows for distribution, modification, and free use, provided the original licensing terms are maintained. A man doing home detention for his alleged involvement in a $180 million cryptocurrency fraud scheme is apparently on the run after he tampered with his ankle bracelet monitor, New York prosecutors said. Horst Jicke, the former CEO of purported crypto mining and trading firm USI Tech, is believed to have tampered with his ankle bracelet on October 4th and absconded in violation of his pretrial conditions, an October 10th court filing states. Pretrial services alerted the government approximately 12 hours after Jicke's bracelet stopped working, nearly immediately seeking an arrest warrant against the fugitive. Jicke, a German national, was arrested on December 23, 2023 in Miami, Florida, after entering the United States for the first time in more than 5 years to vacation there. Guess he should have done that. And that wraps that up. Jumping into more Bitcoin news, this is from Cointelegraph. This was posted on October 11th. A little recap from Bitcoin Amsterdam. Flawed research drives harmful Bitcoin policies. Speakers at the Bitcoin Amsterdam 2024 conference have highlighted the far-reaching consequences of misinformation in academic research on Bitcoin. During the Beyond Resistance Money panel discussion on day 2 of the conference, speakers said that academic inaccuracies have misled and continue to mislead the media, contributing to misguided government policies and harmful regulations. The Bitcoin advocates detailed how flawed studies on BTC emissions and mining practices have driven erroneous narratives in journalism and policymaking. One important issue discussed was the role of flawed academic research in spreading misinformation about Bitcoin. Andrew Bailey, a professor at Yale NUS College and senior fellow at the Bitcoin Policy Institute, highlighted a specific issue in an influential academic paper that inaccurately reported Bitcoin emissions data. He said, "The problem, I'm afraid, is academics and the wrong or even damaging things they say about Bitcoin. Academics have been wrong about Bitcoin, but nobody reads the stuff, right? Right?" Bailey pointed out that the paper contains a unit error on the chart that has not been corrected, even though it continues to be cited as factual. He emphasized that such mistakes can have a lasting impact on public understanding of Bitcoin. Bradley Rettler, associate professor of philosophy at the University of Wyoming, added that journalists often lack the time to verify or deeply understand academic sources, further spreading these inaccuracies. According to Rettler, the reliance on academic papers by journalists who may not have the resources to become subject matter experts contributes to the problem. So the journalists read these academic papers and they translate them into everyday parlance, and the problem is when you start with crap, you end up getting crap. Craig Warmke, a member of the Bitcoin Policy Institute, warned that misinformation has real-world implications, particularly in the realm of policymaking. Policymakers and regulators don't have time to read these academic papers, so they read the journalism and this has resulted in some attacks on Bitcoin mining, self-custody, and financial privacy. Warnke stated that this pattern has resulted in restrictive proposed legislation, especially in Sweden, to tax the Bitcoin mining industry out of existence. He also said there's an attack on software developers working on technologies that promote financial privacy. These are serious issues. The problem has bled through to journalism and to policymaking, and law enforcement and regulators, and bad research on Bitcoin and academia is largely to blame, and so is the absence of the research. Warnke suggested that while academia has historically worked against Bitcoin, it is time for academics to start supporting the cryptocurrency, or at least be factual. How about that? That'd be a good start. Next up from Bitcoin Magazine, this was posted on October 11th. What do Bitcoin miners expect next? Bitcoin miners have always been a reliable indicator of the overall sentiment within the market. By tracking their earnings and actions, we can get a sense of where the price of Bitcoin might head next. In this article, we'll explore the latest trends in Bitcoin mining, how miners are reacting to current market conditions, and what we can learn from key indicators to gauge how Bitcoin miners are positioning themselves for the coming weeks and months. One of the best ways to assess Bitcoin miner sentiment is to examine their earnings in relation to historical data. This can be done using the Puell multiple, which measures current miner earnings against the yearly average from the previous year. As of the latest data, the Puell multiple is hovering around 0.8, meaning miners are earning 80% of what they were making on average over the past year. This is a marked improvement from a few weeks ago when the multiple was as low as 0.53, indicating miners were earning just over half of their previous year's average. This significant drop earlier in the year likely put financial pressure on many miners. However, despite these challenges, the fact that the Puell multiple is recovering suggests that the outlook for miners might be improving. Even though earnings are down, there are no signs of miners leaving the network. In fact, Bitcoin's hash rate, which is the total computational power used to secure the network, has been steadily increasing. This surge in hash rate indicates that more miners are entering the network, or existing miners are upgrading their equipment to compete for block rewards. However, looking at the hash ribbons indicator, which tracks the 30-day, which is a blue line, and a 60-day, which is a purple line, they have a chart here that you can look at in the article. Moving averages of Bitcoin's hash rate, these two averages have been getting closer to crossing, which could potentially indicate a bearish outlook for the short term. When the 60-day average rises above the 30-day average, it historically points to miner capitulation, a time when miners under financial stress shut off their equipment. Until we see a bearish crossover, there's no immediate sign of bearishness. One positive is that every time this happens, it has been followed by a period of accumulation, which typically precedes a rise in Bitcoin prices. Investors often consider these capitulation periods great opportunities to buy Bitcoin at lower prices. While we've discussed miner earnings in relation to Bitcoin's price, another important factor is the hash price, the amount of Bitcoin or US dollar miners can earn for each terahash of computational power they contribute to the network. Currently, miners earn approximately 0.73 Bitcoin per terahash, or about $45,000 in US dollar terms. This amount has been steadily decreasing in the months following the latest Bitcoin halving event, where miners' block rewards were cut in half, reducing their profitability. Despite these challenges, miners are still increasing their hash rate, which suggests they're betting on future Bitcoin price appreciation to compensate for their lower earnings. One of the most interesting metrics to watch is the hash price volatility, which tracks how stable or volatile miner earnings are over time. Historically, periods of low hash price volatility have preceded significant price movements for Bitcoin. As of the latest data, hash price volatility has begun to drop again, suggesting we could be nearing a period of substantial price movement for Bitcoin. Bitcoin miner earnings are down compared to historical average post-halving, but they're recovering from a recent significant low. Bitcoin's hash rate is still climbing, meaning miners are pouring more computational power into the network despite lower profitability. The hash price continues to drop, but miners remain optimistic, likely due to expected future price appreciation. Hash price volatility is falling, historically indicating that a large move in Bitcoin's price could be imminent. Bitcoin miners seem to be bullish about the long-term potential of Bitcoin despite current challenges. If current metric trends hold, we could be on the verge of a significant price movement with most indications pointing towards a positive outlook. And they have a link to a YouTube video in this article if you're interested. My own personal view is that the pain trade for Bitcoin is sideways, and that's exactly what it's doing. And so, just dollar cost average and accumulate, and you'll be fine. Next up, from bitcoinnews.com, this was posted on October 12th. Michael Saylor, MicroStrategy will be the leading Bitcoin bank. Michael Saylor, the founder and executive chairman of MicroStrategy, has become one of the most prominent figures in the Bitcoin world due to his company's aggressive and unwavering commitment to Bitcoin. With over 252,000 Bitcoin in its reserves, MicroStrategy has invested around $16 billion into the digital asset. Saylor recently unveiled that his ambition is to transform his company into the world's leading Bitcoin bank, and he's making big moves to achieve this vision. Saylor's bold plans for MicroStrategy's future center around Bitcoin's long-term value. According to him, Bitcoin is not only a top-performing asset, but also a revolutionary force in the financial world. His ultimate goal is for MicroStrategy to grow into a trillion-dollar company driven by the potential of Bitcoin, Saylor stated during a fireside chat hosted by Bernstein. This is the most valuable asset in the world. The end game is to be the leading Bitcoin bank or merchant bank, or you could call it a Bitcoin finance company. He added, if we end up with 20 billion of converts, 20 billion of preferred stock, 10 billion of debt, and say 50 billion of some kind of debt instrument and structures instrument, we'll have 100 to 150 billion of Bitcoin. Saylor sees Bitcoin as much more than just a digital currency. He views it as a cornerstone of a new financial system. In his eyes, Bitcoin's scarcity and volatility make it a superior asset for hedging against inflation and storing value, especially compared to traditional fiat currencies. He predicts that by 2045, Bitcoin will make up 7% of the world's total financial capital, a significant jump from its current 0.1%. At that point, he expects the price of Bitcoin to reach an astonishing $13 million per coin. According to Saylor, Bitcoin has the potential to outshine almost every other investment option. He has built his company's strategy on this belief, issuing debt to buy more Bitcoin in anticipation of its long-term price appreciation. As of now, MicroStrategy's stock has become a de facto proxy for Bitcoin, rising significantly as the value of Bitcoin increases. Saylor explains his reasoning, stating, my view is that it's much more intelligent to borrow $1 billion from the fixed income market and lend it to Bitcoin at a 50% ARR with no counterparty risk than to reverse that and find someone willing to pay me 12 to 14%. In other words, Saylor believes that lending to Bitcoin itself by investing in it offers better returns than lending to traditional institutions like corporations or governments, which come with added risks. Saylor is adamant that Bitcoin is not just a passing trend, but the birth of a new asset class. It's the first time in 100 years that we've actually had a new asset class and a new way to think about money and capital that's being embraced by the regulators, he said. He believes Bitcoin is gaining legitimacy as more financial institutions and regulators embrace the digital currency. He highlighted, I don't have any problem seeing how we could raise 100 billion more capital and then 200 billion after that. It's a $1 trillion asset class going to 10 trillion and then to 100 trillion. The risk is very simple. It's Bitcoin. You either believe Bitcoin is something or you believe it's nothing. This momentum, according to Saylor, marks the beginning of a digital gold rush set to start in 2025. He argues that investors will have about 10 years to buy Bitcoin before it's mostly unavailable on the open market. By 2035, he predicted that 99% of all Bitcoin will have been mined and sold, leaving only 1% trickling out over the following 106 years. This creates a sense of urgency for those looking to invest. What makes MicroStrategy stand out from other companies involved in Bitcoin is its unique approach. While many companies like Marathon and Block include Bitcoin in their treasury strategies, MicroStrategy's focus and scale make it a trailblazer. Saylor has outlined a clear vision of the future, one that involves MicroStrategy using capital markets arbitrage to borrow money at low interest rates and invest in Bitcoin. The company doesn't plan to lend out its Bitcoin as a traditional bank might. Instead, MicroStrategy aims to generate returns by holding Bitcoin and borrowing money to invest more in the digital asset. Peter Schiff, a well-known economist and critic of Bitcoin, recently took to social media to mock Saylor's strategy. Schiff suggested that MicroStrategy should borrow another $4.3 billion to buy Bitcoin that the U.S. government plans to sell after seizing it from Silk Road. Schiff had long been critical of Saylor's approach, accusing him of gambling with shareholder funds. Despite these criticisms, Saylor's strategy has led to a 1,208% increase in MicroStrategy stock since August 2020, even though Bitcoin itself has risen by a comparatively modest 445%. Every once in a while, the government does something smart. I think Michael Saylor should have MicroStrategy borrow another $4.3 billion and buy it, Schiff said. Saylor's plans are not without their risks. MicroStrategy has accumulated substantial debt in its pursuit of Bitcoin, with around $4 billion in debt against its total Bitcoin investment of $9.9 billion. Despite this, Saylor remains confident that the returns will more than justify the strategy. He expects Bitcoin to offer an annual growth rate of around 29%, which would help MicroStrategy outperform traditional investments. Moreover, the political landscape appears to be shifting in favor of Bitcoin. The approval of Bitcoin exchange-traded funds in the U.S. and the increasing embrace of Bitcoin by political figures, such as presidential candidate Donald Trump, are seen as important steps toward further institutional adoption. Trump has even pledged to establish a national strategic Bitcoin reserve if elected president, adding momentum to the growing acceptance of the scarce digital asset. Looking forward, Saylor's vision for MicroStrategy is ambitious but clear. He plans to issue various financial instruments tied to Bitcoin, such as equity and convertible debt, to further embed the company in the emerging Bitcoin economy. His ultimate goal is for MicroStrategy to become the leading Bitcoin bank, revolutionizing the financial landscape with a model that blends traditional capital markets with the growing Bitcoin economy. In Saylor's view, Bitcoin represents the future of finance, and he's betting that MicroStrategy will lead the charge in this new era. Only time will tell if his vision will become reality, but for now, Saylor remains committed to his strategy, even in the face of criticism. As he once said, "You're watching the birth of a new asset class," and he's determined to be at the forefront of this financial revolution. And he certainly has its critics, but, Bitcoin is for everyone, friends and enemies alike, and you can do whatever you want with it. And if you don't play nicely, you will get burned. And but if you're smart and you hodl, you're probably okay, as long as you don't get too far out over your skis leverage-wise. Next up, from Crypto Potato. This was posted today. And it's a little bit of a crypto article, but I thought it gives some good information on adoption. So let's just replace the word crypto with Bitcoin. Caribbean's revival mirrors the growing adoption in Argentina, Brazil, and Venezuela. After the downfall of FTX, the Caribbean's cryptocurrency landscape entered a phase of doubt and decreased engagement, leading to a loss of trust in crypto platforms. However, starting in late 2023, there's been a notable revival in such activities across the region. Prominent blockchain analysis company Chainalysis said that users in the region increasingly favored well-known centralized exchanges like Coinbase and Binance. Of course, we don't like to leave our coins on centralized exchanges. We put them in cold storage after we buy our Bitcoin. The latest edition of Chainalysis' 2024 Geography of Cryptocurrency report, shared with Crypto Potato, highlighted a significant uptick in overseas clients establishing legal entities in the Web3 and blockchain sectors within the Cayman Islands in particular over the past year. These ventures typically involve Layer 1 and Layer 2 solutions and span a variety of uses such as artificial intelligence, cross-chain infrastructure, gaming, and data cloud storage. This was revealed by David Templeman, who is a specialist financial investigator for the Cayman Islands Bureau of Financial Investigation. The fallout from the various collapses, FTX, Terra, USD, Luna, Celsius Network, and Three Arrows Capital, has placed pressure on the industry to learn from mistakes and put in place better oversight and guardrails. There is a strong community of blockchain and Web3 companies within the islands, both physically present and legally domiciled here. Chainalysis believes that this resurgence in crypto activity in the Caribbean could potentially solidify the subregion as a key hub for adoption in the future. In general, Latin America is the second fastest growing region for cryptocurrency adoption, with a year-over-year growth rate of around 42.5%. Chainalysis found that the most widely used service among Latin Americans is centralized exchanges, utilized by 68.7% of users, which is slightly below the rate in North America. Institutional and professional investors, particularly those transacting over $10,000, primarily drive the region's transaction value. Argentina leads with an estimated cryptocurrency value received of $91.1 billion, marginally ahead of Brazil at approximately $90.3 billion. Argentina ranks as a leader in the stablecoin market within Latin America, accounting for 61.8% of stablecoin transaction volume. This figure also surpasses Brazil's share of 59.8% and is significantly higher than the global average of 44.7%. Meanwhile, Brazil's institutional crypto activities reflect a renewed interest from major financial players as the monthly value of transactions exceeding $1 million increased by roughly 29.2% between the last two quarters of 2023 and about 48.4% from Q4 23 to Q1 24. Additionally, Venezuela has slowly emerged as one of Latin America's fastest growing crypto markets, witnessing a year-over-year growth of 110%, which far exceeds that of any other country in the region, despite the uncertainties surrounding the Maduro regime. Well, probably because of it. Hyperinflation tends to do that to people. Interestingly, DeFi is another aspect of cryptocurrency growth in Venezuela. While centralized services have dominated the value received since 2022, there's been a growing interest in DeFi, especially noticeable by late 2023. So even though there's a lot of shitcoinery going on, it's good to see that digital assets are growing in these areas. Speaking of shitcoins, this from Decrypt, posted on October 11th, and I just have to shake my head. Trump crypto project World Liberty Financial sets token sale date. It's finally here. Former President Donald Trump's decentralized finance project will launch its token sale next week. In a Friday post on Twitter, World Liberty Financial announced that the public sale of tokens will start on Tuesday, October 15th. The sale will be open to those who qualified through the whitelist. Prospective clients were able to apply for the whitelist starting in September. For now, World Liberty Financial is only open in the U.S. to accredited investors, that is according to the SEC, those with a net worth of at least $1 million, either individually or with a partner, and excluding value of primary residence. Accredited investors also have to have annual income of at least $200,000 or $300,000 with a spouse or partner for 2 years. The U.S. regulator says, with the expectation that the salary trend will continue in the current year. The project did say it hoped to eventually be open to all Americans. World Liberty Financial is an Ethereum-based decentralized finance project first announced by Donald Trump's son, Eric, back in August. The project will provide borrowing and lending crypto services, the team behind the project said in an exclusive interview with Decrypt's sister company Rug Radio last month. On Thursday, the project posted a blog explaining that it aims to become the one-stop shop for DeFi across the globe. DeFi is the convoluted and experimental sphere in the crypto industry that wants to replace traditional financial services by using blockchain technology. A prime example of an established DeFi project is Uniswap, a decentralized exchange that anyone can use to swap digital coins and tokens. Many DeFi projects are considered risky, however, and hacks in the space are not uncommon. Republican candidate Donald Trump has come out explicitly as a crypto-friendly candidate ahead of the U.S. presidential election in November. Formerly against the space, Trump used to say that he was not a fan of Bitcoin and cryptocurrencies, but he has since dived into the world of NFT collectibles and even said that he wants all remaining Bitcoin to be mined on American soil. He has further said that World Liberty Financial will help make America the crypto capital of the world. So appreciate the support for Bitcoin, but don't really like the shitcoinery. And finally, An article from Bitcoin.com news. This was, let's see, updated 2 days ago. BRICS slashes US dollar and euro transactions to below 30%. Uh-oh. Russian Finance Minister Anton Siluyanov has revealed a decline in the use of the dollar and euro within BRICS transactions, noting that these currencies now make up less than 30% of payments. Speaking in Moscow on Thursday, Salyuyanov pointed out that national currencies now account for 65% of the group's transactions. He was quoted by TASS as saying, "Indeed, we are in practice using national currencies and the Russian ruble within BRICS. 65% of all the settlements is made in rubles in national currencies." This demonstrates a significant shift by BRICS countries toward their local currencies to reduce dependency on Western financial systems. With the addition of Iran, Egypt, Ethiopia, Saudi Arabia, and the United Arab Emirates in January, BRICS, which previously consisted of Brazil, Russia, India, China, and South Africa, has grown in economic and political influence. Salyuyanov confirmed the share of the dollar and the euro is declining and is less than 30% now. This trend aligns with BRICS' broader strategy of promoting de-dollarization, which has accelerated due to sanctions imposed on Russia and other geopolitical tensions. By encouraging the use of national currencies, BRICS nations are strengthening economic ties while insulating themselves from the effects of Western sanctions. Finally, I wanted to highlight this week's post on the Bitcoin Fortress Substack entitled Understanding UTXOs and How to Manage Them. So check that out, and if you like it, feel free to subscribe. It's free, and if you really like it, you can become a paid subscriber. It ain't that much, $5 a month. And before I wrap up, I did want to put a shout out to the top boost on Fountain last week at God's Death with 536 sats. Thank you, sir. And with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack at bitcoinfortress.substack.com. There is a link in the show notes. And you can follow me on Nostr. I am Nostr only, and my NPub is included in the show notes as well. And with that, I will talk to y'all next week. Bye-bye.